With a full V-shaped recovery by the markets, after the recent stock market declines during the initial phases of the pandemic, there are still opportunities available for undervalued stocks. Whether you're a value investor, growth investor, or dividend investor, all markets and stocks have been affected in one shape or form, even though the market has recovered to some degree. Using the principles of value investing as well as dollar cost averaging can be hugely advantageous during times like this. In this video, I'll discuss 3 different stocks that you can purchase in June 2020, which are still undervalued and present great opportunities for not only gaining profits, but collecting a handsome dividend along the way. Get ready, you are now entering the Academy. Without further ado, here are the 3 stocks that are still undervalued after the market collapsed in early 2020, and which still provide great opportunities for not only long-term gains, but significant dividend passive income along the way. For the first stock, we have Altria, ticker symbol MO. Altria is a dividend aristocrat, meaning the company has distributed its quarterly dividends every year for over 50 years. The stock had recently fallen due to its merger with Juul Labs and with the recent temporary shutdown at its primary manufacturing facility in Virginia, although that has just ended. As a tobacco company, it's well protected from the impact of the COVID-19 pandemic, as smokers will buy cigarettes regardless of the greater economic climate or any lifestyle changes caused by the virus. Altria showed off strong growth in the first quarter. Cigarette shipment volumes jumped as customers stocked up and inventory was pulled forward as the pandemic hit. That, along with the higher prices, drove revenue up 13% to $6.36 billion, while adjusted earnings per share jumped 18.5% to $1.09 billion. Smoking rates actually tend to go up during recessions and other stressful situations like shelter-in-place orders, so Altria could continue to see sales volumes increase over the near term. That should provide a tailwind for one of the strongest dividend stocks out there and encourage a generous dividend hike as the company aims to pay out 80% of its profits as dividends. Altria currently offers a dividend yield of 9.3%, and investors could get a rewarding dividend hike later this year. The second stock is AT&T, ticker symbol T. AT&T has been repositioning itself as a media giant over the last several years. Although its 2015 acquisition of DirecTV is widely regarded as a flop, the AT&T bet on satellite TV when cord cutting was picking up steam, and the verdict on its Time Warner acquisition is still out. The coronavirus pandemic has also not been kind to traditional cable networks like TNT, TBS, and CNN, or the advertising business more generally. That may explain why AT&T stock has underperformed the S&P 500 since the coronavirus sell-off started, falling 24% since February 21, 2020, compared to a 12% decline in the broad market index. Even though the company's core telecom business is recession-proof, essentially functioning as a utility. Its wireless business remained solid in the first quarter with 136,000 new postpaid customers, though challenges with the Time Warner business, including the cancellation of the NCAA basketball tournament, led to an overall slight decline in revenue. Still, after a recent sell-off, AT&T offers a well-funded dividend yield of 7.4% and has a payout ratio of just 58%, indicating plenty of room to raise its dividend. With HBO Max set to launch at the end of the month, the stock could see a boost if the new service is well received. AT&T is also a dividend aristocrat, though its dividend hikes have slowed to just a penny per share in recent years. The final stock is Hanes Brands, ticker symbol HBI. The apparel industry has been hit hard by the coronavirus pandemic, and most clothing chains have closed their stores during the lockdowns as they are considered non-essential. Hanes Brands also had to close its stores, but its ownership of a wide range of brands selling basics like undergarments and exercise clothes, brands like Hanes, Champion, Playtex, and Wonderbra give it an advantage over more traditional clothing chains. Though the stock has fallen along with other apparel stocks during the crisis, Hanes brand should bounce back as stores open and consumers get back to their normal lives. Its focus on basics also makes it more recession resistant than most apparel stocks and less sensitive to fashion trends. First quarter performance was impacted by COVID-19 as organic sales fell 11% and second quarter sales are expected to be down significantly. However, the company has taken steps to shore up its balance sheet and liquidity, and it ended 2020 with $1.1 billion in cash, which plans to add more. Hanes Brands now offers a dividend yield of 7%, and as its stores reopen, the stock should begin to recover. Compared to other stocks in the beaten down apparel sector, Hanes Brands looks like a good choice for a dividend stock trading at a discount. By employing simple strategies learned in the 10X Academy channel, which include value investing, dollar cost averaging, and dividend reinvestment, you can create a low-risk dividend income flow that will appreciate over time and continue to pay income continuously. Through careful planning and diligent investment of capital, as well as reinvestment of dividends, one can create a dividend income stream that can provide substantial income, eventually covering everyday expenditures and beyond. This video provided 3 stocks that are generally underappreciated as of June 2020 and can be added to any savvy investor's portfolio, providing not only capital gains opportunities, but also substantial dividend income along the way. Who can be an average dividend yield of over 7% for generating consistent passive income growth for years to come? If you'd like to pick up some of these stocks now, make sure to use the Webull stock trading app, which provides a great vehicle to purchase stocks commission-free, thus providing a great way to create and grow a dividend income portfolio using the methods mentioned previously. And if you register now and you make your first deposit, you'll receive 2 free stocks that can be worth up to $1,600. So make sure to take advantage of this offer now. Be sure to check out the links in the description to get started in creating your very own passive income producing asset and start your path toward financial independence. Thank you for watching this video. If you enjoyed this video, don't forget to smash the like button. It will really help out the YouTube algorithm in bringing you more passive income and wealth creation strategy videos. And if you haven't done so already, be sure to subscribe to the 10X Academy. And don't forget to turn on the notification bell to be alerted on more passive income strategy videos. This is the 10X Academy.